Please note the mandatory SEBI disclaimer on screen. This analysis is for educational purposes only. Always consult a financial advisor before making investment decisions. Media distribution is shifting toward the high-intent audience of international football. ZEE Entertainment is currently integrating global sports rights with digital data to define its next growth cycle. While the legacy media sector faces broad industry headwinds, ZEE's recent data suggests an alignment between long-term structural pivots and short-term technical indicators. By securing 39 FIFA events and achieving digital break-even, ZEE has entered a phase where fundamental value and the current stock price have begun to diverge. This setup suggests a technical objective focused on a potential breakout above the 100 INR resistance level. To evaluate this setup, we need to deconstruct the specific operational advantages ZEE has built to withstand current market volatility. In the fourth quarter of fiscal year 2026, ZEE reported an 11% year-over-year decline in advertising revenue. The company attributed this contraction directly to the geopolitical crisis in the Middle East, which led regional advertisers to pull back on spending. This revenue compression stems from macro-environmental factors, rather than a decline in ZEE's domestic content performance or audience reach. These temporary advertising losses contrast with the multi-year assets ZEE is securing, which establish a more stable content foundation. Current market sentiment is focused on these transient macro figures, which can obscure the value of the long-term assets the company is accumulating. A primary driver of ZEE's potential valuation shift is its recent acquisition of premier sports rights. The deal is an 8-year exclusive partnership, granting ZEE broadcast and streaming rights for India from 2026 to 2034. The agreement includes 39 global events, ranging from the flagship Men's World Cups to U20 and futsal tournaments. ZEE is also implementing a beyond-the-game strategy, producing documentary series and exclusive content to maximize engagement for every property. This acquisition provides ZEE with exclusive rights to high-intent FIFA viewership in India, across both linear television and digital platforms. By securing 8 years of exclusivity over the FIFA portfolio, ZEE has established a runway of premium content that is difficult for competitors to replicate. The capital required for this digital and sports pivot is generated by ZEE's established legacy business. This viewership data shows ZEE TV leading in core primetime, with 45 gross rating points, ahead of major industry rivals like Sony and Star Plus. This performance contributed to a 17.4% all-India TV network share for fiscal year 2026, a high point for the company over the last 3 years. This legacy strength has built a significant liquidity cushion, with 27.6 billion rupees in cash and treasury reserves as of March 2026. This cash position allows ZEE to fund growth initiatives without taking on expensive debt in a high-interest rate environment. This reserve provides the company with the stability to manage ad market fluctuations while continuing to fund its transition into sports and digital media. The second component of ZEE's growth model is the performance of the ZEE5 digital platform. ZEE5 revenue grew 1.6 times year-over-year, reaching 14,888 million rupees in fiscal year 2026. This growth led to a major milestone. The digital business achieved adjusted EBITDA break-even during the fiscal year. This was achieved while maintaining a high output of content, including 34 originals and a total of 45 shows and movies released in the final quarter. We are seeing the results of operating leverage, where digital growth is beginning to contribute to profitability rather than requiring continuous cash infusions. Achieving digital profitability during a period of weak advertising suggests that ZEE has improved its underlying unit economics. Fundamental changes in a company's outlook eventually appear on price charts as institutional accumulation. Looking at the daily technical chart for ZEE Entertainment, we can identify an inverse head and shoulders pattern. The head represents the structural bottom near 68 INR. The volume spikes on the right shoulder serve as evidence of institutional buying prior to a breakout. The chart indicates a completed accumulation cycle, with the price consolidating below a final resistance zone. This resistance zone, or neckline, is the final barrier to a technical trend reversal. The technical recommendation is to wait for a confirmed momentum breakout above the 100 INR level before initiating a long position. This setup is based on the alignment of 8 years of FIFA rights, a high liquidity balance sheet, and a technical reversal pattern. As always, market investments involve risk. Success depends on adhering to strict stop-loss rules and proper position sizing. If you found this analysis helpful, please like and subscribe for more deep-dive financial breakdowns. ZEE has pivoted its core assets towards sports and digital profitability. A technical breakout would represent the market's confirmation of this underlying fundamental shift.